if you want to help someone else by going on the title to close their deal properly and get the mortgage approved, you always have to keep in mind that might come back to bite you or might negatively impact you sometime in the future if you want to buy something on your own.
Don't buy the expensive car, pay off your student loan, live with your parents as long as you can.
Families helping new home purchases with down payment, as well as being on the deal itself to be able to qualify for the Perfect, Varan. Thanks for being here. Obviously, so just to sort of continue the conversations on the mortgage process. Lots of first-time home buyers. What are some best practices, tips that they should be maintaining as they sort of go through a lot of the process of buying one of their biggest, obviously, investment around? What are some best practices there?
Have a budget.
Okay.
Make sure you spend money on what is necessary. So focus on savings. Don't buy the expensive car. Don't have a big liability payment that will definitely negatively impact you to qualify for a mortgage. Pay off your student loan. Live with your parents as long as you can, so you can keep saving it. And if you cannot afford to buy, don't be shy to get help from your family. I think that's what we are seeing a lot. Like it's really hard to come up with a down payment or qualifying. Just be open, have a plan in place, and talk to your parents or talk to your family member and get them involved on it. If you have a right attitude and if you have a vision, I'm sure most of the parents or the family members will be involved on it. I'm seeing a lot of those things happening. And if you don't have anything to buy right now, look into pre-construction. You may be able to save over the next 3-4 years to come up with a down payment, and also you're not missing out on the appreciation. You're at least getting into the market right now. So if you cannot buy something, just don't sit back and say I cannot afford it. Go and buy a pre-con.
Got it.
At least it will, talk to your realtor, talk to your advisor, and make sure they have some product that suits your needs. At least it will help get you into the market.
Perfect. So one of the most important things that you hear all the time is don't buy that car and have a huge payment on your credit bureau, because when you run the ratios and things like that, it can significantly impact you, right?
That's one of the biggest challenges we see, car loan and the student loans on the first time.
Okay. And so it's advisable as much as possible to pay off that student loan as fast as possible.
Absolutely, because that's also affect your debt servicing as well.
Got it. When you say debt servicing, I'm assuming it's some type of ratios.
It's a ratio. So it's a GDS, it's a gross debt servicing ratio. So anything you have on debts is increased. So it cannot be, the rule of thumb is it cannot be over 44%.
Okay.
So versus your income, so you had to really minimize it.
Got it. So and just so that a lot of people understand it, so we're looking at any debt obligation somebody has, and including this new mortgage, the payments for that new mortgage, those obligations cannot be more than 44% or 40 to 44% of your income as a general rule of thumb.
The rule of thumb is 39% is a GDS. So GDS calculated based on your principal and interest payment at the stress test.
Okay.
Plus property taxes and a heat.
Gotcha.
Divided by your gross income, not the net income, gross income.
Okay.
The TDS, that plus your car loan payment, credit card payments, and loans or line of credit, whatever you have, divided by your total gross income. That cannot exceed 44%. That's the rule of thumb.
Got it.
So the more of these have,
it
may negatively impact your borrowing capacity.
Amazing. And Varan, I know you mentioned something like your family is helping. Obviously, people qualify. What kind of when you said that? What kind of trends are you seeing? Are you seeing both families helping new home purchases with down payment, as well as being on the deal itself to be able to qualify for the lending? What are you typically seeing nowadays?
I'm seeing one or the other, or in some cases both.
Okay.
The common thing we see is the parents like to help them with the down payment.
Okay.
So they don't want to be involved in the transaction.
Got it.
So they just give a lump sum down payment, so that helps them to qualify. So if someone is on the verge of a 10%, having extra 10% to make it 20% is also qualifying, become much easier as well. Is a conventional loan. And sometimes they give the down payment and also they go on the title as well. Because they want to protect themselves from the down payment as well. So it depends on the situation.
Gotcha. Perfect. And just on that note, Varan, I mean, I wanted to just quickly touch base on this, and I just wanted to touch base on it just to be able to make sure people understand this. Let's say if somebody, parents are buying a house today and they may not be able to qualify loan, so they want to add one of the other child, to the mortgage and things like that. I wanted to touch base on the fact that that can potentially impact the child negatively
100%.
when they want to sort of start their family, right? Can
It's
you
funny
maybe
you brought it
quickly?
up. I was literally on the car before I come here having the same conversation. The mother wants to purchase a property,
Sure.
and the mother needs to have a daughter's income. And the conversation was when can the daughter comes out and how is going to impact if she want to buy something. It will negatively impact.
Right.
Even though there are two people on the mortgage, if you're going to buy something on your own, Chen, it comes down to you are fully responsible for the 100% of the mortgage payment.
Got it.
And all the expenses associated with the home. That's including the property taxes
Right.
and maintenance and etc.
Yeah. So, and then when you sort of calculate the whole TDSR,
It's just
GDSR,
off the roof.
it's going to be off the roof when
Yeah.
the daughter wants to start something on their own and things
Exactly.
like that. So, anytime when somebody wants, as a best practice, if you want to help someone else by going on the title to close their deal properly and get the mortgage approved, you always have to keep in mind that might come back to bite you or might negatively impact you sometime in the future if you want to buy something on your
Correct.
own. Awesome.
Correct.
And can you talk a little bit about the mortgage pre-approval process? And the reason I say that is sometimes you hear things like, hey, this is just a pre-approval, it's not valid, versus sometimes pre-approval means everything. Can you maybe talk to us a little bit on that aspect of
So there's two different things, right? One is a pre-qualification and a pre-approval.
Okay.
So pre-qualification is you just call and hey, I'm making 80,000, my wife is making 90,000, I have 20% down, how much I can qualify? Do you have any debts? It's just a very conversational piece.
Got it.
Pre-approval, like how I run the pre-approval is, I ask for the income, I ask for the credit check, I ask for the down payment confirmation. So make sure the deal is underwritten and they're good to go and the rate is locked with the bank.
Got it. So that's to a point where there's some type of an application actually in the system.
In the system.
Because you're actually locking in the
Locking
rate.
in the
Because
rates.
You don't often hear that because people just say, hey, I'm pre-qualified or I'm pre-approved. I'm going to go buy XYZ, and sometimes they take the condition off financing, but they've never given any type of document to the broker or the person that's actually funding the deal.
So it's actually a broker's fault for not asking for the document because how do you know it? You can come back and say I'm making $300,000. I'm like, how did you verify the $300,000 job?
Fair.
I need it could be self-employed, it could be very tricky. So
Sure.
you need to make sure you validate those documents. So you are not you are not giving a wrong expectation to the client,
Right.
or you're letting the realtor to run around and show the property and then realize it. I can't even buy them a property.
Yeah, exactly.
So you want to be
Exactly.
mindful with the time and the energy
Amazing.
and the expectations.
Yeah. Just on that note, Varan, so I know one of my buddies and I, we were just talking and we were saying, hey, maybe because, we've been in the space quite a bit and understand some of the logistics of how things work. Let's say somebody's purchasing, again, just to go back, they're purchasing the home for the first time. You kind of mentioned on very very, very high level steps like, hey, setting the budget and things like that. What would one of your first things, as a first time home buyer, what is one of the first things that they should do? Is it that should they work with obviously a broker like you to be able to help identify, what should be my, how much can I purchase a house for? How would you sort of navigate that first few steps?
I think if you're ready to buy the property or if you're looking to buy the property, I think you should sit down with a mortgage professional before you sit down with the realtor.
Okay, got it.
So you know exactly what the budgets are, what the pinpoints are. You can kind of deal with obstacles and make sure that's been all cleared up. Then you go and talk to the realtor and say, I did sit with a mortgage professional or my bank. They told me I can go up to the X amount of purchase price. Can we look into the properties?
Perfect.
I think it's most of them what happens.
It's
is
the
that
other
it's
way
all
around, which is what we often see,
Yeah.
and then we are running around to see if we can qualify for the mortgage, etc. So it's always better to sit with the mortgage professional first, understand what number you're working with before you sort of go out to the market and start working on a lot of
And that's the same advice the realtors gives as well. So if someone reach out to them and say, I want to purchase a property, they put the client in touch with the mortgage professional they work with to make sure they are not showing the wrong product for the client.
Yeah, that makes perfect sense. Varan, I'm going to take a quick step back and just come with a different angle. So we've now talked about very conventional mortgage strategies, talk about people who are sort of, getting it because they want to either buy a home, they want to buy investment properties, they want to be able to liquidate cash flow, or they want to free up cash flow, I want to say, or they want to really borrow so that they can invest towards, other investment opportunities, right? Let's talk about the scenario where, let's say I'm a senior, I don't necessarily have, a mortgage on the property right now. I don't have any liens on the property. But as far as I'm concerned, this is my retirement income. Like, the only thing that I've saved up over the last 30 years is this house that's mortgage free. how do I now use this property so that I can actually live my retirement the way I want?
That's a new trend right now, Chandra.
Okay.
It's called reverse mortgages.
Okay. Interesting.
So there's two lenders who actually lend on it. So pretty much what that means is, the older you are, you can borrow more against your property.
Okay.
So let's say, for example, if you're in a late 70s,
Okay.
you will able to borrow up to 55% of the property value.
Okay.
So how that works is, they will fund the mortgage to you.
Yeah.
You don't make any payment.
Okay.
You keep the lifestyle going. Interest accrues. So interest keeps adding it up.
Okay.
So at the point of the sale or the death, or you don't need the property, they'll do the calculation and say how much is outstanding. Let's say you borrowed 500,000.
Yeah.
Now with the interest is 600,000. So they will pay the executors or whoever's on the will, or even the exactly same person, they don't want to live in the house anymore.
Yeah.
They will get the proceed then.
Yeah.
So it helps all the people to keep the lifestyle going.
Got it.
Without compromising it.
Got it.
So they can go and buy the dream car they want to buy. They want to give a gift to the grandchildren or the children they were wanting to buy the property for, rather than selling the property.
Got it.
So it's the most popular product right now,
Okay.
especially after interest rate hikes.
Okay.
So there's a lot of seniors, they were able to keep the line of credit as an interest only payment, able to keep up the payment. But at the time, the line of credit interest rate was only about 2%.
Right.
Now it's at 7.5%, 8%.
Right.
So now they cannot keep up the payment because they're on a fixed monthly income.
Right.
So they are taking the reverse mortgage
Right.
to pay this line of credit to have more cash flow.
Got it. So reverse mortgage is, and you said something like the older they are, the more they can borrow. Can you elaborate?
So
on
the
that
reason
again?
for that, the lenders, how they look at it, the older you are, you're going to live less. So I am okay to lend you more money.
Fair.
You're not making any payment.
Gotcha. And on these, you're saying you don't make any payments, so
You
the
don't make
interest
any
gets
payment.
capitalized,
Interest
and then
get
in case
capitalized.
that disposition of the property, whether it be death or whatever the circumstances are, at that point, the interest and the principal gets paid to the lender.
Pay to the lender, and the net proceed will be
Give it to the
give it to the
beneficiaries,
beneficiary,
etc. Okay, got it. Okay, so that's and is that? I'm assuming it's been in practice for a long
It's been
time.
in practice for a very long time.
Okay.
So there's Equitable Bank, they offer this product. That's one of
Okay.
them. And it's a home equity bank. That's only they do. They only specialize in the reverse mortgages.
Got it.
It's a very popular product. It used to be called CHIP. I don't know if you heard of it.
Yeah, that's exactly.
So
Okay,
CHIP
gotcha.
become a home equity bank.
Got it.
Now it's more than popular ever.
Okay, got it. So really, this and I'm assuming at this circumstances they don't necessarily look at income. It's more so the equity within the
Equity,
home
yeah.
that gets sort of used as a source for that.
Correct.
Got it. Got it.
One of the reasons that's popular as well, because the healthcare has become so advanced,
Yeah.
so they don't need to go to nursing homes. They can
Yeah.
actually stay home and get a nurses or
Sure.
PSW to come and give them a
Sure.
service. So they don't want to give up on the property. They just
Sure.
want to keep living.
Sure.
in it.
Yeah. So I mean, the reality is that scientific advancements allow us to live longer,
Yeah.
but there's a cost associated with it, and how do you sort of fund that?
Exactly.
And this becomes another tool to be able to help
Yeah,
fund.
especially
it
with the
at
baby
end of day.
boomers right now.
Yeah, no, absolutely. No questions asked, right? Varan, talk to us about maybe now just jumping on to like off segment, but like any other unconventional strategies that you might have maybe used a mortgage, whether it be, I don't know, to fund something or whatever the circumstances are and how that kind of worked out for you.
Give me an example.
Just give me the craziest deal that you've done, like something that, that sort of, not everybody thought was going to be possible, but you found a way to make it happen for whatever the purpose is.
So I had a deal. Literally, I thought I won't be able to even help the client out.
Sure.
So they bought a property in east of Stouffville, like probably 2 hours. I forgot the name of the city.
Sure.
So they bought it in, and they only had a 5% down. Young couple, they moved in. They don't have a 20% down. And we literally shopped the deal with every single lender, talked about the family, gifting the down payment. With the little help of the family and the values has gone up, we were able to find a private lender to put them into the house, actually because the value of the property has gone up.
Okay. Okay.
I really thought they're going to walk away from the house because they don't have a down payment. So the value was there, and we had a lender went up to 80%. It's a private lender. So that's why I always say the private lender is not a bad option.
Yeah.
Because they're actually able to help them to close the property.
Right.
Rather than they're losing away, they're walking away from
from the
100,000
deposits.
equity. So even the lender, they kept the lender fee to the mortgage, so it doesn't come out of the proceed. It only comes out when they sell the property.
Okay. Oh, that's pretty interesting. So they didn't. So they didn't charge the client upfront fee.
Lender fee, so they kept it on the property.
Got it. Got it. And I'm assuming the notion with that is eventually after a year or whatever the case may be, they'll be able to move to a
Different
traditional
property or
lender.
traditional lender, or they may want to sell and they want to come closer to the city, but they were able to get into the property without losing the deposit.
Got it. Got it. Got it. Perfect. So that's pretty awesome. I mean, and in terms of just like your market prediction to what's happening, or your prediction to what's going to probably happen in the market, give us your thoughts. So I know we are now.
One's is opinion only. It's
of course,
opinion
once
only.
we're February 2024, and
Yeah.
it's definitely your opinion. Obviously, you're not necessarily. If you had the crystal ball, my friend, I
wouldn't be
with
here.
you. Exactly right. So talk to us.
I think the inflation number came really low today. Like I think it's at 2.9 versus 3.4.
Gotcha.
So all this time the prediction was there's no rate cut
Yeah.
till end of this year. I think that's going to be changed in my opinion.
Okay.
What I'm seeing over the last few weeks,
Yeah.
so end of January, early February, a lot of multiple offers. Things are selling much quicker.
Okay.
Multiple offers. Like I have a lot of clients missing out on the offers because there's so many competition.
Right.
I think everyone's having a FOMO right now.
Right.
The FOMO is
Right.
coming back. I think this market is driven
Yeah.
mainly, in my opinion, is demand and supply and a FOMO.
Yeah.
So now everyone's like, okay, rate hike is done.
Yeah.
Now we're going to go into the rate cut.
Yeah.
It could be end of this year or mid this year or as early as spring.
Yeah.
What's going to happen? The prices are going to go up. Let's all get in. So all the buyers on the sidelines are coming in.
Gotcha.
But on the other side, I'm also concerned the inventory level is going to keep coming up as well.
Because-
There's a lot of mortgages going to come up for renewal.
Right.
So there's a lot of affordability issues. So that may also keep up the inventory high.
Right.
But I think there's a demand for it.
Right, right. And I know you mentioned with the mortgage coming up for renewals, what are there some factors that people should consider? I mean, whether it's mortgages coming up for renewals or something that they already have a variable versus fixed, and sometimes it's unaffordable at this point to sort of maintain certain things. What kind of factors do they typically have to look at to see if refinancing it to a higher, lower interest rate or a different product? What should they be looking at? Like, how would you sort of handle something like that kind?
I think it's come down to what we talked earlier about the cash flow. The
Okay.
cash flow is king.
Right.
So we really have to sit down and do the analysis, do a calculation and budgeting and see, can we pay off some debts to make it more affordable for you based on your income?
Right.
And if you still cannot,
Yeah.
the best option is downsizing or selling it.
Got it. Got it.
Do not carry it because of the ego, because of the stigma. If you can't afford it, you can't afford it. The numbers don't lie. You have a budget and you have a cash flow, or maybe refinance and pay off the debts and see if you can keep it going.
Right.
Or maybe take some equity out and renovate the basement and put a separate entrance, and maybe you can create some additional income. If you have explore all these options,
Right.
and if you still cannot afford it, or if you're still having a cash flow problem,
Right.
you may have to sell it.
Sell the home, and people have to be okay to do that. I mean, that's what the
The
market
heart will
is.
just follow, but
Right.
unfortunately, that's the right thing
Sure,
to do.
sure. Varan, as we sort of wrap up, the session, any last things that you want to add? Anything, a tip or anything in the space that you want to maybe just make sure our people are, aware of?
Nothing I can think of. I think we've pretty much covered most of it.
Okay.
And make sure, if you're doing a pre-approval, if you're in the market looking for it, make sure you do a pre-approval. Just don't go with a verbal commitment, I'm making the income. Do a full pre-approval. It's going to save you big trouble down the road.
Awesome. Perfect. Varan, once again, thanks for obviously joining us and
problem.
enlightening us with all different aspects of mortgages, lending, creditworthiness, all of that stuff, because I think that all of that is important. Sometimes we take some of these things for granted, but I think it's important to just be able to talk about it and understand all aspects of it.
Thank you, Chen. Thanks for having me.
Thank you.
No
It's
problem.
a pleasure.
Pleasure.
Thank you.